CPI comes in hotter than expected. PPI comes in hotter than expected. Trump announces more tariffs, and the market moves toward all-time highs. Have you figured it out yet? The news doesn't matter. This is Invest with Jacob. Okay, guys, so in our last video, we talked about the fact that the ES and the NQ had different patterns. The ES's was a little more bearish, while the NQ's was still bullish. And when the markets aren't in sync, we can expect chop, which is essentially what we saw for the last couple of days, before the markets pushing over last Friday's high yesterday, giving us the idea that the bulls are now in control of the market. I warned that the NQ still had bullish potential, and that we were above support, and the bulls should be given the benefit of the doubt, even though we did have some downside pressure and patterns. The bulls did hold support and have now pushed higher. So where can we go from here? I'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we are going to take a look at the results of our indicator. It had another good day yesterday. We'll jump in and see. If you're new here, we created a custom indicator that works in TradingView. You do have to have a TradingView account to use it, and it's absolutely crushing the market. So let's jump in and take a look. Okay, guys, so here we are on the 5-minute SPY chart in TradingView, and this is what we use for our day trading setup. Now, this can be used for swing trading as well. In fact, we have outlined how impressive it is with stocks like Apple, Nvidia, Netflix, Amazon, all of them. You name them, Bitcoin, you name all of the big ones. It has it crushed, and it is doing well on swing trading. You can check out older videos for that. But today we're going to concentrate on what happened in the day trading setups, and that's on the 5-minute SPY chart. So what you're looking at here on the left in yellow is pre-market, on the right is the post-market, and in the middle in white is our regular trading hours. This is the only thing we trade, but we do need this other information for our indicator to work properly. The indicator is right here. It's called Invest with Jacob Pivot Point Pro, and I'll turn it on and off so you can see that the buy and sell signals come and go. And what this does is it gives you simple trading entries at the tops and bottoms of moves that allow you to catch big moves in the market in the first half of the day for day trading. We don't trade past 10 a.m. Pacific Standard Time, 1 p.m. Eastern, because you just get afternoon chop, and the market typically doesn't give you great trades in the afternoon. Of course, there are exceptions to the rule, but for the most part, morning is where you want to be trading. So we have our indicator on. Nothing in the morning. They had a buy cycle going already, so we did not get a buy signal, which is okay. But right at the top, literally at the top of the move, you get the sell signal, and they run it all the way down here to 605 from the 607.30 area. So $2.30 move down with no real stress whatsoever. As you can see on the screen, our people in our room are just amazed by it. They said, "Who shorts here?" After the market is crushing on the way up. It looks like it wants to break out. Right at the top, we decide to short because the indicator tells us to, and boom, winning trade. Now, we did get a buy right here, and this buy actually gets you out. So we had a nice winning trade here. This became a buy. We took it. This was actually a winning trade as well. This move up was about a 20% winner, and that's how we use the indicator. So we take a first profit really quickly and then let our runners run so that we don't have losing trades when the market's going in our direction. And so we had 2 trades, 2 winners, and a nice easy day on the indicator. So again, if you want to learn how to trade, if you love to trade or you're struggling to trade and you want something that makes it super simple and gives you easy rules and makes it simple to follow, the indicator is for you. If you're an experienced trader but you're not great at day trading or your emotions get the best of you, the indicator is for you. It's helping hundreds of traders beat the market day in and day out and finally get good returns. We outperformed the S&P, which was up 40% last year. We outperformed that day trading. This indicator is helping real people absolutely beat the market for the first time in their lives. And if you want to be part of that, there's a link down in the description. Click that link. It'll take you over to our website. Once you're there, you'll get taken to our indicators page, which is under our membership plans area. It's $59 a month or $590 for the year. And here's the thing, guys. I know you're going to love this so much. There's a 30-day money-back guarantee on both the yearly and the monthly, because I know you'll have it for 30 days and you'll say, "Where has this been my whole life? This is incredible." I am so happy to have something that tells me when to trade, when to stop out, when to get in and out of the market in an easy, simple, understandable way instead of trying to look at 1,000 other things. One crazy thing about this is it's a forward-looking price action indicator. Almost every single indicator you will find is backward-looking and waiting on moving averages to cross or something to change, where you get in 4, 5, 6 candles too late. This got you in at the top today and at a bottom area. You had 2 winning trades. You can see what people are saying about it down here at the bottom. All kinds of positive feedback from all of our traders. Guys, you're going to love it. Check it out. I really want you to be a part of it. Okay, now let's jump into the charts and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And as we look at this chart here, before I actually get into the micro count or the 1-hour count, I do want to zoom out just a little bit. I'm going to zoom out to the 4-hour chart. And what we're looking at here, guys, is we've been in a major range for about 3 months now. So back here in November, we made a low that held here. Then they went up and made a high in early December. And since then, we've been in this range. So many people freaked out when we got this 3% move down and this one for 2% move down, this move down, said the market was over, we're going down, it's all over, the bulls are dead, blah, blah, blah. Until you actually break support, until the market trend changes, until you get below a key area, the bulls are in control of this market. And this is really an important concept to understand. This sell-off is a liquidation bar to flip all of the long short and then trap them and then take them back out of the market. It's how the market makers push price higher. They trap people into short positions, because I know on this day I had like 9 YouTube comments of people saying, how could you think the market's going to go higher? The bull market is over. All of those people got trapped. They all got trapped and stopped out. They took them down again. They trapped a whole new group of people, stopped them all out. And this creates liquidity to the upside so that they continue to push the market. Once the market gets to a certain price, there are no more buyers because people are scared that they're getting near a top. So what do they have to do? They have to create selling. So the people who want the price to go higher actually sell the market. This creates a change in short-term sentiment. It flips all of the longs to short. All of the late longs just got crushed. All of the late shorts are going to get crushed. They flip them all to short, then they stop them out, use them as pressure and squeezes to push the market higher. So all this is a series of traps that sets up for the market to go higher. So until support actually breaks, and right now our main level, upper level, this is the upper level of support, is this line right here at about 5,800. Until that breaks, this is a bull market with pressure up. This would be a warning, and then below the April lows would be a true change of character in the market, which is what you're looking for when you're looking for a reversal. So just because you see a big red bar down doesn't mean the market is weak. It means that it could be weak, but you better be really aware of traps, because that's how they get liquidity in the market, and they use you to do it. So let's zoom back into the 1 hour and look at the counts. Okay, so on the 1 hour, we were looking at this 1-2. It had a really nice 1-2 setup, and then that failed because they got to the 1.0 at 61.21. I said this was a key level last week. And once they get there, they have to hold 60.70 to stay bullish. And what I mean by that is, for this to be an impulsive direct move higher, 60.70 has to hold. When it breaks, more often than not, that will lead to a lower low down here. However, there are times that diagonals play out, and that looks like what we're going to get here. So we always give the bears the benefit of the doubt if the pivot breaks, because more often than not, that will lead to a lower low. But if they do fail and you start to see chop, you better be ready for the next move higher, because the bulls will turn this into a diagonal and continue to push higher. So right now we have a 1, 2, A of 3, B of 3, C of 3, which we look to get up into that 6,200 area. Turn down in 4, which should come back towards wave 1 territory, and then 5 up towards that 6,250 to 6,300 area on ES. So probably still going to be very choppy, because diagonals are very choppy. We would look for this to move up into the 6,200 area next in a pretty good squeeze. We are heading into a holiday weekend. We know they like to float markets up during that time, so tomorrow could be a pretty decent squeeze up into 6,200. Then from there, we would look for them to try to hold and pull back and then continue on to that 6,250, 6,300 area. Now, for the bears to take control, they're going to need to stop this move up. They're likely to give up a high in most cases. However, if they can stop anywhere in this resistance, so you have heavy resistance right here around the 6150 area, if they can stop and turn them down, they would need to break it down below this low here at around 6013. If they can break below that support, that should start a snowball to the downside that would take us pretty quickly down into the 5700 area to 5900. 5,900 being the first place we would look, and then 5,700 after that. So the bears really need to break 6,000 to get the ball rolling to the downside. Otherwise, the bulls continue to press, continue to squeeze, and continue to look toward that 6,300 area we've been talking about. Over on the NASDAQ, now for a very long time, the NASDAQ has been the fly in the ointment. All the way back in August of 22, when the market was pulling back, I said, if you're looking for a big meltdown, which we potentially were, the NASDAQ was the problem. And again, this week, I told you, if you're looking for the bears to take the market down, the NASDAQ is your problem, because the NASDAQ still had a pretty decent structure. They had a 1, 2, 1, 2, and then they've broken out now over their pivot. So they've held their lows. They've held where they needed to. They've broken back over the pivot. They've now hit the 1.0 at 22,126 that we talked about last week. They are there, which activates the pivot at 21,674. So now the NASDAQ needs to stay above 21,674 to stay bullish. If they break below that, it would either point us down in a bigger meltdown into the 19,000s, or it would become a diagonal like we're seeing on the ES, where they break down through the pivot and are still able to take it back up to the highs. Again, diagonals are less likely, but given the stance and structure of the ES, if they did break below the 618, I would still give them credence until they broke below this level here at 21,425. So the bulls are in control directly above 21,674. If they break that, the bulls are still in control until 21,425 breaks. Then I'd look for continuation to the downside after that. So the bulls are in control. We're headed back up to the highs. ES is very close. NASDAQ very close as well. We will see what we get over the weekend here, but until support breaks, bulls remain in control of this market. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right to our website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial. Because we want you to get in there, we want you to make sure you love it, become part of the trading team. You can see everybody down here that's loving what's happening in the rooms. You can do all of this risk-free and cancel any time. You literally have nothing to lose by checking us out. We also have our educational material. We have our Elliott Wave for Beginners online course, as well as our advanced Elliott Wave course. These courses are helping traders understand the weird phenomenon of the market, like the news, like the weird spikes all over the place, like the range we're in. All of this stuff is covered in these courses, and it's helping traders understand crazy markets. In our advanced course, we're going over the exact stuff we're talking about right now. You have diagonals. We are in diagonals on both on the ES and potentially going to be in one on the NASDAQ. You have double and triple threes, flats, triangles, and then how to trade Elliott Wave. This is what's really important. Everybody hears me say, oh, it could go up or it could go down. That's stupid. It's not stupid. It's understanding where the key levels are and where to set your trades and how to find trading setups. Those levels that tell you when the market's going up and down are the most important thing you can have. And the sooner you realize that, the better trader you'll be. Now, I do understand that this course could be a little too advanced, or you're just getting started with Elliott Wave. As you can see, our traders are loving it, but we do have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand these markets in a way that makes sense. This week we had CPI hot, PPI hot, Trump yelling tariffs everywhere, and the market continued to climb toward all-time highs because no one cares what the headline is. Can the news be a catalyst? Absolutely. When the Fed talks, the market moves. It doesn't mean if the Fed says good things, the market's going up, though, and that's the point. The tone or tenor of the news is useless. Don't look at the headline. Just look at what the market setup is telling you. It talks to you every day. That's a huge advantage, and Elliott knew this, and he knew that key levels are what mattered. He knew what happened when they held and what happened when they broke. In this course, we have 25 videos where we go through your introduction. We go through your chart setup and tools, all the tools you need to get with Elliott Wave, how to use them and why we use them, and then the Elliott Wave for Beginners area where we go through each of the levels. We show you how to measure the key levels, find out where they fail, when they don't fail, what their targets are, all of that good stuff so that you can make sense of an irrational market. Now, the cool thing about these courses is if you want them both for a discount, we have our bundle pack, and you can get them for $37 off. However, if you want to get them for free, simply check out one of our monthly rooms as they are included in this price. In our first room, the Invest with Jacob room, you get all my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered. A midday video where we go over exactly what we see in the counts on all charts that you want to see, gold, Bitcoin, the Mag 7, ES, NQ, whatever. It doesn't matter. We go through all of them. Whatever you want to see, I go through. We have that call. You get the beginner's course. You get the advanced course. We trade the SPY and the QQQ end. We swing and day trade. So we do trade quite often in my room. But if you're looking for all of that and more, in PT's room, you get everything you get in the Invest with Jacob room and futures trading, individual stocks, income trading, and advanced training. His income trading method is absolutely crushing the market, and his reduced risk binary method gets you in at a really cheap price and gets you huge multiples on your money, and it's how he structures those trades that's so unique. Something you really have to see to understand, which is another reason for that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. The bulls are in charge until they aren't. They're looking to break out over these highs. The next target would be 6,200. Then we'd look for a pullback, then 6,250 to 6,300 overall. If they do break down, they need to break down through that 6013 area. If they break through that, we could see a very quick sell down to 5,900 and then 5,700 after that. Over on the NASDAQ, they have a bullish setup. They're taking out their last resistance levels and heading back toward their highs. We would look for 22,406 next to the upside, and then a pullback off of there, and then higher up toward that 23,000 level overall. If they do pull back and can't hold 21,674, that's an indication that the bears are trying to take back control of the market. I would still give the bulls the benefit of the doubt, even though more often than not they fail here, and that's because the ES is in a diagonal posture that looks higher. If they take out 21,425, then I would be very much on the bear count, looking for them to break down into the 19,000 area. Guys, it's a holiday weekend. It's Valentine's Day. Give some love to your family, to your spouse. Have a great weekend. Get away from the computer. Have a drink and have some fun. And I'll talk to you next week.